Let's talk about what are the factors that affects your credit score. Number one is payment history. Payment history affects up to 35% of your credit score. So what's payment history? Payment history is about how you're paying your credit when you utilize them. Are you paying on time or are you paying any late payment? That is called payment history, and that contributes 35%. So please make sure when you use a credit, you always pay on time. The one trick for this one is always set up auto pay. And the number two is amounts owed. What is amounts owed is, let's say you use a credit card $2,000, and if you pay that off before the credit card reports the credit bureau, that means they report zero as credit owed, you're good. But if you pay it off after the report to the credit bureau, then they report it as if you spend $2,000 and your credit limit on the credit card is $10,000. So that's 20% utilization. So this is called utilization ratio also, or it also called amounts owed. So this 20% will be reported on your credit bureau, and that impacts it. So usually people say try to maintain your credit utilization below 30%, but even if it's 30%, still it impacts the credit score significantly. So the best way is to use the credit card and pay it off on time if you want a good credit score. And let's say you have a 0% APR credit cards if you want to use for investment or some other purchases or some things like that. In that case, it definitely impacts the credit score. So, but that's your trade-off. You want to use the investment purpose your 0 APR card, or you want your credit score to be, at certain number. So that's a trade-off. But at the end of the day, amounts owed or percentage of utilization have 30% effect on your credit score. That's number two. And number three is the length of credit history, or it's also called as age of your credit. So what is age of a credit? Let's say I have two credit cards. One is I got 10 years ago. One is I just got 2 years ago. So what's my credit age? So credit age is calculated as age of sum of ages of individual credit lines divided by number of credit lines. That means in our case, we have two credit cards. One is 10 years old, one is 2 years old. Sum of credit ages of individual credit cards. That means 10 plus 2. That's 12 divided by number of credit lines. We have two credit lines divided by 2. That's 12 by 2. That is number 6. So our credit length of credit history, or our credit age, is average is 6 years. That's the number. So you always try to maintain a longer the credit history or longer the credit age is, the better it is. That impacts 15%. That's number 3. The number 4 is a new credit. New credit pretty much talks about number of hard inquiries on a credit. So when you apply for a loan, when you apply for a mortgage, when you apply for an auto loan, either they do a soft credit check or hard credit check. So soft credit check, there will not be any hard inquiry and there will not be any report on it. But if it's a hard inquiry, there will be a report on your credit that says there is a hard inquiry made. I mean, if the lender looks at the credit score, they know that you're trying to apply for some credit, and they see the date, they see who they pulled, all those details. So just remember, these lenders, whoever want to lend, they don't want consumers to apply more credit cards. That means they don't want to see more hard inquiries on your credit report. Sorry. So that means try to always maintain the number of hard inquiries minimal, and there is a trick to go around it. I'm gonna talk separate video where I talk about how to improve. So, but for now, just to go over what are the factors that impacts credit score. So we covered 4 so far: payment history, amounts owed or credit utilization, or number 3 is length of credit history or age of the credit, and then number 4 is a new credit or number of hard inquiries. And then number 5, that's the last one, that is the credit mix that impacts up to 10%. So what's credit mix is here? Credit mix is nothing but the type of credit lines we have on a credit profile. Let's say you have a credit card. Let's say you have 2 credit cards. One is 10 years old, one is 2 years old. And you have a home, so you have a mortgage. Then you have a car. Let's say you have a car loan. That's number 3 types. You have a credit cards, you have real estate mortgages. Number 3 is your car loan. So the wider the mixture, the better your profile looks and the better it is, and that impacts your credit score 10%. So just to summarize what we have discussed so far, there are 5 factors that affects majorly our credit score. Number 1 is payment history. Number 2 is credit utilization or amounts owed. Number 3 is the length of credit history or credit age. Number 4 is a new credit or number of hard inquiries. And then number 5 is the credit mix. So I hope you understand these factors, what they are and how it impacts. And the first two impact very high. That's 35% and 30%. So payment history and credit utilization. Always try to use the credit card and pay it off. Try to pay it off every 2 weeks. So by the time the credit bureau, you already paid off, so you're good. So your payment history is good. You're paying on time, and the amounts owed is not very less, not even 30%, or like let's say 10%. So that's very good. So you covered 65%. That's a very significant. Thank you very much, guys. The next video I'm going to talk about what are the tricks we can increase the credit score. Bye bye.